money. It pulses, it breathes, it powers dreams. But who commands it? Who tames it? Enter Tata Capital, the financial titan hidden in plain sight. Today we dig into its soul, its strength, its fractures, its promise, and its peril. Stay with. Why does Tata Capital even exist in public eye now? Because of regulations, because of scale, because the game changed. In 2022, RBI classified Tata Capital as an upper layer NBFC, meaning it must list its shares by September 2025, and it is now. Thus, this is just not a business strategy, it's compliance, survival, and ambition colliding. Now the IPO is coming. Let's tear down the bones of the beast. First, let's talk about the business model and the verticals it has. It does many things. Here are the core pillars: retail, consumer loans, personal loans, two-wheelers, durable goods, housing finance, home loans, commercial, SME finance, working capital, business term loans, institutional infrastructure project finance, large deals, long gestation, secured lending, LAP, loans against properties, collateralized, distribution, wealth, advisory, investments. They just don't lend, they sell financial products also. Think of these as engines, some larger, some smaller, some riskier. The magic is in balancing them, cross-selling, controlling defaults, and managing capital. Also, the loan book matters. As of March 2025, its gross loan book stood at 2,26,550 crores. I repeat, 2,26,550 crores. That's massive scale. And when scale means diversity, you can also go for stability, but you also invite slightly weak links. Okay, if I talk about the financials of this company as compared to 2024, 2025, the net profits of Tata Capital 3,646.6 crores versus 3,229 crores in 2023. Business growth, profits are there. Revenue from operations in the quarter 7,664 crores. That's a modest 10% CAGR from 2023 to 2025. Loan book is 2,26,550 crores in March 2025. Quarter 1 2026 profits, it has soared to 1,040 crores, up 120% year on year, because it was 6,546 crores year on year. Net interest income, a very important parameter for the financial services company, 2,866 crores in quarter 1. It's up 16.8%. Asset quality does also matter. If you look into this, the NPA, the gross NPA around 1.9%, net NPA around 0.8%. That's it. Provisional coverage ratio 58.5%. And these are not negligible. They tell us how many loans are soaring and how much buffer exists. Now, if I talk of the Tata Capital's IPO, it opens on 6th of October. Fresh issue of 21 crore, equity shares plus offer for sale of 26 crore shares. Expected issue sizes of almost 17,200 crores. The price band in the range of 310 to 326 per share, right? And the valuation post IPO is expected to be around 1,32,000 to 1,38,000 crores. Now, when it comes to the grey market, the previously, it is being priced at a discount of, the IPO is being priced at 56% discount versus its unlisted valuation 6 months back. The markets are valuing it aggressively, but there is room built for the uplift from the listing growth and investor confidence. Now, when it comes to the pros of this IPO, the brand and the trust of Tata's, okay, that's a fortress. That reputation gives customer confidence, easier partner tie-ups, better borrowing terms. Second, the scale and the diversity. The sheer size of its loan book across multiple verticals gives cross leverage. One slump in one vertical may be offset by the another one. Third one is the strong quarter 1 upside. 120% jump in your profits of 2026 quarter 1. The momentum is there, not just backward looking, but also forward looking. And the asset quality is good enough. The NPA is just 0.8%. And for a scale, they are manageable, and they also have buffer their provisions. And in terms of the regulatory mandate, the IPO is not optional. It is in response to the RBI's rule. So this listing had to be there by Tata's, right? So around 17,200 crores of capital infusion which is coming by this IPO, that's massive. And as per the management, it gives fuel for around 2 to 3 years of growth, expansion, and buffer needed for near-term further dilution. Post-IPO, the company claims to have growth fuel for almost 3 years. Let's talk of the risks involved, because every giant has a shadow. And here are what it could derail. First is the high valuation. Around 1.38 lakh crore valuation expectations are enormous. If growth by any chance disappoints, the sentiments would swing. Also, the IPO discount versus the unlisted valuation of a fall of almost 56% suggests that the markets are cyclical, because that's a massive 55% cut from the so-called true value in the unlisted space. Who loses? The retail investors who bought unlisted shares at inflated prices. Who wins? The operators and the insiders who create that artificial hype in the grey market. And this is not for the first time, and it won't be the last also. The unlisted market lacks transparency, regulations, and liquidity, making it a perfect playground for manipulation. The one lesson, even before the IPO has come, is don't get lured by the hype of an exclusive pre-IPO shares. Stick to regulated markets where at least the playing field is clear. Okay, because earlier it was upwards of 800-900 rupees. It was coming as a pre-IPO price, and right now around 300-326 something. Now, it also has a bit of risk in terms of the credit or default risk, because with a gross NPA of 1.9%, bad loans could rise in economic stress, especially in SME and the commercial segments. Any spike in provisions could eat up their margins drastically. Third point, in terms of the interest rate, the NBFC is dependent upon borrowing to lend. If the borrowing cost rise because of global rates, domestic pressures, margins would compress. And in terms of the IPO raise helps, but fine balance between growth and capital buffer is needed. Aggressive lending may erode the entire buffer the company has. Before listing, the unlisted shares would have dropped by almost 56%. There is a price discovery pressure, and many people chase unlisted shares thinking that they will make a fortune before the IPO listing. But the reality, it's more often than not a rigged game. It was traded as high as around 800 rupees before the IPO, right? And now it is just 310 to 326 rupees odd. In comparison to the peers, we talk of Bajaj Finance with a higher ROE return on equity, lower NPAs and tighter margins. Investors may demand premium, which Tata Capital may struggle to match. This is a crossroad. On one path, expansion, dominance, legacy, which is turned public. On another, one mistake, one overreach, there's a complete sentimental betrayal. So Tata Capital is not just a financial vehicle, it's the test of scale, discipline, and trust. So should you watch? Should you bet? Should you fear? If you believe in the Tata name, believe that scale plus diversity plus trust still matters, then this is your front row seat. If you don't, if you worry about the interest swings, defaults, overvaluation, let's be a little bit cautious. But one thing is certain, it's rare to see a forced IPO by regulation of this magnitude. Rare to see a name like Tata opening its door. Rare to see ambition, regulation, and capital collide together. So after a long time, something coming out from the house of Tatas. Let's see whether it's a game changer, whether it creates wealth for its shareholders and for the Tata Capital as a brand, because reputation is at stake. So let's hope for those who invest in this Tata Capital IPO, it does create some significant wealth for them. And for those who want to see the waiting game, let's wait and watch as to how the stock price performs over a period of time. Put in your comments whether you want to subscribe to this IPO or you find that it's just too overly priced. I look forward to seeing your comments.